Hi there. I'm John Carisco, also known as DayTraderRockStar, host of Day Trading Radio. DayTradingRadio.com is an online trading show that we broadcast live every single day from 8 o'clock in the morning till about 4 in the afternoon, and lots of times we do overnight shows and stuff. I specialize in a certain type of trading. I've developed a methodology of trading that I feel is the best way of making money in the markets. I've been trading personally since 1996, and I've been teaching trading since 2007, since I've been broadcasting and teaching my methodology. The methodology is called the high probability setup methodology, but more importantly, I teach divergence trading based off of the lane stochastic oscillator or indicator. I am an expert at this type of trading. I feel this type of method of trading is the best way of making money in the markets, short-term or long-term. I am constantly teaching this live on the air, but again, that's a long time to be, talking in the markets. We do a lot of education on the show. A lot of questions from listeners and members in the chat room, and a lot of technical analysis of different charts and stocks. And I trade stocks, options, and futures. But recently with the the introduction, not really the introduction, but the easy low entry way of getting into the markets with prop trading accounts, simulation accounts, I find that a great combination to use with the methodology that I teach, because there is a certain signal that I look for. I call the super signal, that is perfect for qualifying these prop accounts. And when you qualify, if you're not familiar with this, a prop account is something that you would open up. It's a simulation account that you would open up with a firm. You don't have to deal with them. It's all online. And basically you would open up for a minimum cost, usually about $20 to $30, and you have the access to your own platform, your data feeds, everything you needed to kind of trade. So right now you're paying a minimal fee to get started and trade a simulation account. But the catch here is, if you qualify on your simulation account, meaning that if you hit their profit target, then you are supplied with a live account with real money in it. And then with that real money, you get to keep basically 90-10 split. You get to keep 90% of it. And a lot of these firms will let you keep the first $10,000. So I just find that an amazing opportunity for traders who are getting into the market. And if you don't have your own money to trade, this is a great way of actually getting started and having a possibility of actually qualifying and getting your own money right off the bat without even having any money. But it's not as easy as it seems. But I do make it easy with the techniques that I teach. So so the concept and everything, what you're seeing in the chart behind me is basically a bunch of lines. If you're familiar with me, understand what these lines are. These are stochastic. This is a stochastic oscillator at different time frames. This is the ES chart. This is a futures chart, and I teach the signals basically on the futures charts. Because why? Because during the day we can make money during the day. It's like, I call it the ultimate side hustle. If you have time to trade and you're in front of the markets and we have a super signal, I identify it, we trade it, and you make money from it. Now, if you have a prop account, you get to your levels, you get to your qualification, and next thing you know, you're trading real money. That's all, we'll deal with that when we get to that. The important part is understanding that the concepts and stuff. So I'm going to announce today that I am starting a coaching service, to kind of start off coaching traders an exact method of success. All right. I've always said to myself, if my son wanted to start trading, or he came to me and says, can you teach me how to trade, or I want to get involved in trading, I wouldn't want him just to go out and just try to learn it on himself. I've done all the mistakes. I've started in 96, and probably from 96 to 2003, 2004, that was my learning curve, because there was so much involved with that. We had the bull, the tech bubble. We had the roaring 90s, crazy. And then we had, of course, 9/11, and then even going into 2002, there was some issues, and then 2008, and I've been through it all. And I've learned how to lose money, and this is what I remember. You do remember that the randomness of the market will, and not having a game plan and being just in the markets to trade and being cavalier and just trying to catch a trade is not, that's one way of doing it. But if you have a set plan, a method, and you're waiting for a certain thing to, that works, why wouldn't you do that? Why wouldn't you do that? Now, there's a lot of things that I want to discuss on this to announce this coaching service, this mentorship program that I'm starting is meant to get newer traders started. But even if you're an advanced trader, or you need help trading, or not understanding a lot of the concepts that I do teach, or familiar with me, or not, or just want to start learning divergence trading, maybe you specialize in something else, it's all good. We'll go more into that in a second. So that's, I would teach my son the same thing I would be teaching new clients on the one-on-one coaching. Even though the coaching could be open to anything, and I'll go into that a little bit more detail. I want traders to learn how to be successful. All right, and I know that route. I know how to make traders successful. The methodology is sound. The weak link is the trader. All right, it always will be. It'll always be the weak link, and I think all traders have to deal with it. Even myself, I still have faults that I have to deal with in trading. I don't think any of us are expert traders. I mean, I should say perfect traders. I am an expert at the stochastic divergence, though. So I would teach my son or my daughter, only the important things. I wouldn't waste his time on things that weren't relative in today's markets. The markets have changed over the years. When I was just starting off teaching, there's a famous video out there of me back in probably 2007, 2008, of me carrying a bunch of books and going through the books and throwing them out one by one. For somehow that video went viral and kicked off my career on the show. And that's true, because all those books, even back then, I realized, those books that we, you try to soak up all this knowledge, and you look at, all right, he put that book out there, he must know something. I better read the book. Well, a lot of that stuff is outdated and doesn't really work. And a lot of people just read other books and just rewrite it and put it in their books. I mean, we all know about the head and shoulders formation. We all know about, support and resistance and moving averages. These are the basics and stuff. Do they all work all the time? The head and shoulders pattern doesn't work all the time, and there's certain things that do work most of the time, and that's what I want to teach. And I don't want to go and say, let's start off with the head and shoulders pattern. I'm not going to do that. We're going to start off on understanding, why this market has moved at this level and how to identify it and get in it and make money and take the money off and do the same rinse and repeat over and over again. Now, I like using analogies when I talk about trading. What can you relate to that makes you understand what trading is about? And everyone has a passion, I hope. You have a passion or something that you're an expert at. And when you're an expert at something, you could do it, and you know how to do it in your sleep, right? And there's a technique that you do to make you an expert. There's usually a technique or something that makes you consistent in what you're doing. And that's, I don't know of what the exact definition for an expert is, but I would say that's pretty close to it in my words. So sometimes I try to grab an analogy, something that's kind of universal. So I use baseball and I use the casino. And the baseball analogy is basically, if you have a batter coming up to the plate and the announcer's like, all right, here comes Johnny Silver up to the plate. And Johnny Silver is he's a low ball. He loves to take that low ball, outside low ball over the fence. He's an expert at hitting that low outside pitch. So I'm sure the pitcher's going to keep it up and up and tight into him, and you hear that a lot if you're a baseball fan. Certain batters like a certain pitch, and they wait for that pitch. And in any case, you're waiting for your pitch, a fastball, a curveball. This guy's a curveball hit. He'll lay off the fastballs, lay off until he gets a curveball, and then he'll smack it. So that's, again, the same concept that we're using. We want to be an expert. Well, I'm an expert. You want to be an expert in a certain technique, and when that technique, when that situation arises, that's when we apply our techniques and we apply our trading trading techniques, and we profit from that. All right. Another thing is the casino. A lot of people would say, well, casino is gambling, but trading's not gambling. Well, I kind of believe that too. I don't, I do think there's better odds in trading than you have in the casino, but yet again, you have professional gamblers out there. And what's the difference between a professional gambler and just an average everyday gambler who goes into the casino and plays a bunch of random games and probably loses money or maybe wins money? A professional gambler has a method, and they have a they have a technique. Be it they first of all, they play only the games that are going to give them the best odds, best chances to win. And that could be poker, that could be blackjack, it could be probably some other ones, maybe, I don't even know. I'm not a big gambler, but I do understand the concept between the blackjack and the poker, because I like to play those. And I'm very, when it does come to, maybe that's the way my head is tuned, it's very logical. So I like to, apply math and science to my trading, and I like to apply it to anything I do. I like that exact science of things, and even though this is not exact, it is close to, exact as I have found, and I think I have found the best way. So, a gambler will, or a poker player will sit down at the table and let's not take in consideration, have people say, well, you have the blinds and stuff. But basically a poker player could wait for a good hand before betting, right? And that's what I would do. I remember I was recently on a cruise, and I must have folded, like 10 hands in a row, and then, and it was before the blinds got too big. And I was able just to wait it out until I got a good hand. And then when I got a good hand, then I would go all in. And I caught right back up to everyone else. And it was a great technique. And I was like, my son was watching me, and he's like, well, you kept on folding. I said, yeah, because I didn't have anything. It was kind of a risky thing. Why would I take a shot on something I wasn't sure of? Or not that you're going to be perfectly sure, but if you have a really good hand, you have more confidence, you have a better chance. People will notice that, and it will probably scare them. There's all kinds of other things that go on in gambling. But again, that's in poker, and then you have blackjack. And there's definitely if the dealer, there's the little cheat sheets you get, and it'll say, double down if you have 2 8s and the dealer has a 5, which is considered a bus card, because most she's going to have he or she's going to have a face card underneath. It's going to be 15, and there's a chance you're going to get another face card. So whenever there's certain combinations that you see on the table that tell you to bet more, bet what to do, and that's exactly what I do, and that's exactly what I want to show you what to do. So if you want that expert on how to identify these areas, that's what I am going to specialize in with this coaching service. Let's see here. Now I am going to go over a key lesson in this video right after this, right after I finish just one more section of this introduction to the coaching. So just hang out for this, because again, this is something you will find in the coaching. I want to discuss something that happened in today's market that I think is very important for people. And it's a kind of a big lesson plan for me when I do teach coaching, when I do teach or coach. And I discuss this a lot, and it's a great example today. So again, that's a good place to segue into exactly what will you learn during coaching. Well, with coaching, it would be something towards the needs of the trader, meaning even though I already have a game plan, what I call a business plan that I like to teach, I could basically help you with any part of your trading. Let me bring up a sheet here, coaching here. This is, you could read a little on that here. Just a little background on me. I'm going to post the link in the description here. There's a lot of different things we could discuss on coaching, but like I said, my job is to make sure you make money. If you take this as a career change or a hobby or whatever you do, you want to do it right and you want to be successful at it. There's no reason why you can't be successful at trading. The hardest part will be controlling your own flaws. Not that you have flaws. I don't know what your flaws are and how they're going to interrupt. But I know that the methodology is sound and that we have to develop, and I can even help you develop that discipline, and that the discipline and the patience that it required for taking these certain setups. All right. So what can you learn? What would we do on the session? Well, basically it's, remember, I teach a precise trading method. I love to teach that method and kind of get people started on the right track. You just learned that one technique. Bruce Lee has a great quote. I was going to do Bruce Lee impression, but let me put it together in my head. Of course, I do all my videos live and not really pre-scripted or anything, so I got to remember it now in my head here. Hold on, let me get it. I am not afraid of a person who could kick a. How does it go? I'm not afraid of someone who could throw 1,000 different kicks. I'm afraid of the person that could throw one kick 1,000 times. I think I messed it up. All right, here it is. I got it for you. I fear not the man who has practiced 10,000 kicks once. All right, 10,000 kicks once, 10,000 different kicks. But I fear the man who has practiced one kick 10,000 times. And I love that, because exactly what we do is we have that one kick that we specialize in. Sorry, Bruce, for messing up your quote. Big fan here. Anyway, back here on that, and we go back to what we can, what we could get here out of the coaching here. So, again, I want to teach you that important technique to get you started on the right foot, and build a business plan around that for you individually, customize it for you. Again, everyone's going to be a little bit different. I don't know if you're a full-time trader, a part-time trader. You want to apply the method to stocks? Do you want to apply the method to swing trading or position trading, your IRA? All this one technique, or the methodology. Basically, there's a couple techniques here that you're going to be taught, or I could teach you. I definitely, when I teach to be, a style to be successful and a method to be successful, it does come with different things in it. Like, I want to discuss one of the concepts right after this little segment right here in the video. So again, we could also, and again, one of the exercises I like to use is I have a kind of an exercise that helps us identify by back playing the markets and going through it and having you go through it after I teach you a concept, and then you get to identify what the market's going to do. So actually you are tested on important chart formations and predictive patterns. And of course the super signal, and you learn every aspect of the super signal, when it works and when to stay away from it. Live trading is also an option in the tutoring and coaching sessions. Now, I have commitments on the show, usually during the day, but I do have my lunch times that I will set aside for coaching, and also after hours, and even possibly overnight. I'm not against getting up at certain areas in the market after the European Open and trading with a person if they want to trade together, or with a group. I think that's also live group trading is available. If you have a trading club or a group of traders that you want to benefit from the coaching, you could do that. Prop trading, I discussed the prop trading earlier. The opportunity to get into this market basically at a very, very, very cheap low entry price. You don't even have to come in with a lot of money, but you have the opportunity to make a lot of money by qualifying for a simulation account and then getting a real account. And when you qualify for your simulation account, it's because you have applied the methodology. All you have to do now is continue this same methodology and apply that. And the next thing you know, you'll be making withdrawals and getting paid. You can set up, I show you how to set up your charts, how to set up the indicators, all these indicators, especially if you're new or you're not familiar with anything here. What the different reads are, basically the 9-3, 14-3. Why do we use these levels? What's the order? Everything about the inside and outside of this. Remember, I've been doing this for an awful long time, so it is second nature to me, and I enjoy talking about it because I don't have to. I know the important concepts that are important, and what we don't have to waste time on. There's a lot of things you get waste time on, and I'm against that. I want to streamline things so much that it's just a textbook, and it becomes sometimes it becomes difficult because if we're waiting for a certain setup, and that's what we're waiting for, and it doesn't show up, what do you do in the meantime? You stray from that perfect setup. You stray. And you start trying to do this. And I'll tell you a story back in probably 99. It was after 2000. Yeah, it was before 2001. Probably 99. The markets were on fire. Absolutely on fire. And you really couldn't do wrong. I made a lot of money back then, and I don't credit myself for being a great trader. I credit myself being at the right time in the right place. There was trades that I made that you went to bed, and I'm not, this was a crazy time. I remember I had 300 shares of a stock, CMGI. It was called CMGI. It was an incubator. I had like 300 shares, and it popped up. I forget how much, but I was up $34,000 one day on it, just on like 300 shares. I remember I went to the mall with my friend Eddie, and we came back, and it was up another 30 points after the market. It was like the most incredible thing, and I sold it. And I remember we were just jumping around. I was like, oh my. So anyway, I don't take no credit for that. That was a crazy time. But at that time, everyone was getting involved in the markets. And I had, and I actually had some real close friends that I opened up accounts for. And we were very close. So I said, all right, you know what? I want to open up Schwab accounts for all you guys. There was about 3 or 4 of us, including myself, and I was teaching them trading. And that was back in '99. I wasn't like officially teaching. I was just, we were just all trading together, and that was only 3 years into it. But I told them one thing. I said, if I open up an account for you, we have to meet here every day, and we have to work as a team. it wasn't more than 2 weeks later that people would start, some of the guys would not show up, and they would be trading from their house because one had to travel a long distance and stuff. It was easier for them. And the next thing, all of them blew up their accounts. All of them, because they were just on their own trading. They were just taking what they were, and trading will get you. You will revenge trade. You will chase the markets. And if you're new at it, you're a kid in a candy shop right now, a candy store. It's amazing. So, it's very important to stick to the concepts that I teach you, and even though the market could get boring because of this, you will be successful. And then you'll maybe do push-ups in between trade. Do push-ups and work on other things to make yourself healthy and wise. I'll make you wealthy. You make yourself healthy. So again, there are a lot of things that we could do. It's your session. You have no, you could use it as you will, as you want. And if there's something that you want to ask me, you send me an email, ironaction@yahoo.com, or follow the link in the description, or go to DayTraderRadio.com, DayTraderRadio.com. You'll see a big banner there. All right. And again, just one last thing we'll talk about here, and then we'll get on to an important lesson here. So when you do set it up, what are we going to do? We're going to do, if you go to that, you'll see a site there, and like I said, if you have any questions, email me first. All right, that's step one. Email. Make sure that you're comfortable, and I'm comfortable with you. You feel, that you tell me what you would like to work on. I want to, clean the slate and start you from, fresh, but you might already be infected by, something else. But, I'd like to start you off fresh and teach you from the ground up. But again, if you need help on setting up your charts, or you need help on, or you want to do trading together, or you have a group that you want to go, a trading club or something, just, send me an email. We can work it out. We'll set up a meeting. We're using Zoom and stuff. And then we're going to just do that. So that's how it's going to work. All right. All right. I hope you enjoyed. I hope you, take advantage of that. And if you have any questions, please email me, or just touch base with me in any way you like. Let's jump into the markets now, and if I can think of anything else I might be forgetting, I will bring it up during this. But right now, I want to go over a lesson that is very important that you would get here. You would get a little mentoring lesson right now. All right, so let's. I want to make my picture disappear because I want to use all the charts here. So let's just get rid of my my mug there. And then let's take a look at the markets here. Now, like I said, if you're new to trading, maybe, or you're new to the day trading radio or the way I trade, these are stochastic oscillators here. The indicator, the stochastic indicator. And there's 1, 2, 3, 4 of them. And I work with all 4 of them. And we have different techniques based off these 4. It's almost like, what do you call those? A cardiologist. Read an echocardiogram. This is the echocardiogram of the markets. And actually, I don't want to bore you, but I have a new friend, listener of the show, actually from the same town as me. He was listening to the show. He came to the office and introduced himself. He was a heart doctor, and he studies. He's an electrocardiogram reader, basically. That's what he does. And he heard about, and he's applying stochastic oscillators and the divergences to the rhythm of the heart. I said, that's really cool. I never even thought about that. If there's any type of connection, between, that echocardiogram, that path, but that chart that it gives out. I mean, I read a chart. I said, that's an amazing thing to look into. So he's been following, and I've been kind of coaching him on the concepts of the stochastics and working with that, which I think is pretty cool. Doing a little medical work with the stochastics. And if you're a doctor out there, Anyway, this is what we read the market, and it goes from the time frames are the fastest to the slowest. And I'm not going to go into exactly what each one. It would be too long to discuss everything on what's going on here. So you have the top line here, the second line, the third, and the fourth, and they go by speed. This is the fastest. This is the next slowest, and the slowest, and then finally the one on the bottom. And the one on the bottom you see is green. The one on that's a lime green. The one on the top is another green. It doesn't make. I just make it green. And stochastics typically come with two lines, percentage K and percentage D. And again, I teach all that stuff and explain all that. If you're not familiar with the concepts or terminology, you have nothing to fear. So while we're trading today, and this is the overnight trade, but let's actually go through this overnight trade. Now, this is the NinjaTrader platform, and again, this is the type of platform you would get if you open up one of those prop trading accounts. And I'll put the link in the description for that also, and the coupon that actually gives you that super cheap discount. And that's what you have to wait for, these coupons. There's a coupon available now for like 80% off. So that's why these prop things are so low risk now. It takes the price down from like $160 to $20. So it's definitely worth it. Where is I going to go with this? So this is the game. My thought back here. I'm all over the place sometimes. But all right. So this is the overnight trade. And that's what each one of these things are. Sometimes this is the NinjaTrader platform. The NinjaTrader platform, you get this platform. Now I have a couple of things on here that you might see a piercing line. These are things that come with the NinjaTrader that automatically will place certain reversal candles if you choose so. I set this stuff up on myself. And there's a couple interesting ones. This third one down, this white one here, this is the 44. It's something I keep on my charts. I developed this grouping of stochastic. I didn't develop the stochastic oscillator, of course not, but I developed this grouping and how they work together, and the concept of just using the D line and getting rid of the, and a lot of this stuff, the timing and the predictive patterns in this is what I specialize in. But this 44 is extremely valuable because it's a super signal on itself. And again, if I were to teach people to trade, I would say pay attention to the 44, even though you have to pay attention to the other ones too. The 44, and right here, I just happened to see this before, and I want to just point this out because I think it's a great example. I'm trying to bring my mouse over here because right now it's a cross line here. I wonder if I could get a pointer. Why doesn't my thing point? It just has the cross lines. Anyway, back here, this is actually about 12 o'clock in the morning. Right here, let me get my, let me see if I can fix my mouse here. Okay, got the mouse fixed here. Now this is an overnight trade, but the concept is there, and it's really good. So you see, there's a little low here on the 9.3. You got down here under this 20 line. The stochastics are divided by two lines. You have an 80 line and a 20 line. Now you could adjust these lines on your charts, but I like to keep them at 80-20. In some cases, I'll move them down, but basically, I just want the lines up there. And as you can see, we get through them. We get through them on the bottom, come up to the top, and you can see there's a little movement in the stocks that correspond with the stochastics, and that's what we read. Now, you see how this got down to, underneath that 20 line. Down here, it was this was the 14.4, but typically you'll get a divergence on the 9.3. And you won't get anything else. And if you do get a divergence on the 9.3, then you'll start to see maybe the divergence on the 14.3 and then the 44. Very rarely do you get a 44 divergence and not have a divergence on the 9.3. So when you see such a steep, and we talk about steepness here, that's going to be an F2 here. Let me make sure I have everything all right here. So when we have the steepness between that low and this higher low, and it's way above the line that we're looking at, that 20 line, which is that blue line right there. It's a very steep angle. And we have a low here and an equal low here. That is what we have as a divergence on the 44. Now, again, it doesn't have a lot of oomph in it because it's 1 o'clock in the morning. All right? But you do get a bigger move to the upside. Now, the thing with the divergence, when you have a divergence, 9 times out of 10, that divergence is going to identify a pivot in the direction of the market. So you could look back here and you can see there's a slight, just a very slight trend here that's going down here. You can see it, right? You can see that slight little trend. I can zoom out. You can probably see it a little bit more. But there is a little downward trend. The price is under the 20 period move. It's actually under the 20 and the 50 here, staying under the 50. When you have that divergence, and it happens right here, when you have a double bottom, try to get out of the way here, but now you can see, we zoom this all the way down here. When you have that divergence, you can see now we've kind of started to break the downtrend here, and now we have this uptrend cycle, and that's what a divergence will give you. It'll give you a pivot from the direction. Now, it'll give you a pivot on whatever time frame you're looking at. Now, that's overnight. I have to tell you, that's overnight. But it's still amazing to see these things play out like this. Like I said, show me, what I like to say is, show me a divergence, and I'll show you a market that moves in the direction of the divergence 9 out of 10 times. 9 out of 10 times. All right. Here we have a low and a slight lower low here. But look at the higher low on that secondary move up here. And in this case, you actually see it on this one also. So you have the 14.4 and the 14.3 and the 9.3. And it has a little move here. All right, and you see the move, you got up to that point. Now, there's part of the technique and part of the methodology is knowing when to get out of a trade. So that's already taken care of you in the methodology, especially in the overnight trade like this, when you know this is a very choppy market, or overnight nothing's really going to go on. So the algorithms are going to move it up, they're going to move it down, they're going to move it up, they're going to move it down. If you get a divergence, 9 out of 10 times you're going to get a move in the direction of the divergence. But when do you take that off? Well, I say always take it off on your first rotation back over 80. All right? So maybe you don't get a big move in it, but you get a move and you start to bank all that. Every time you do that, you're getting out with a profit. And you're not leaving yourself open for this little pullback, which is so many people, if you're late on this and you got a bad entry here and your entry here and you get up to here and you're like, I want a little bit more, but this is overbought, you got to consider taking it off. Actually, I want you to take that off, because if you don't, you just put yourself at risk. All right? You put yourself at risk there. And it most likely, because of the algorithms in the market and trading bots and stuff, and how they're bouncing back and forth, it's going to stay in that. You're going to get caught. Any type of setup, and again, what I like about the one-on-one coaching is I'm able to focus on individual setups. Like I could watch the market here and identify. I said, all right, we have and even though this is looking back right now at the markets, and we're looking at the rearview mirror, this is what I look for. I do look for that channel. Once I find a channel developing like this, we want to really pay attention to it. And we look for divergences. Now, there's 3 types of divergences we like. We like what I call pure divergence, which is a low, a lower low, a low, a higher low. And that higher low has to be above that 20 line. That's a real pure divergence, a good one. Then we have what we call a double bottom divergence, which was basically right back over here where we had the double bottom, where price comes down to low, and we come back down and we met that low, but the stochastics held higher. And then we're looking for what's called a relative divergence, which there is a difference. It's a little bit more difficult to see. You have that high angle divergence, meaning the low and the higher low is at a steeper angle. If we consider this flat, that's 180 degrees, right? It's a 180. It's 180 degrees. If this angle goes up, straight up, from a 180, that's a 90-degree angle. Halfway is 45. This is probably about maybe 10 to 15 degree angle right here. Maybe 20 degrees. That's really good. Anything above, and look how high this one is on the 14.4 and on the 44. Now, you're not seeing a pure divergence. You're not seeing a double bottom divergence. But we're seeing what we call a relative divergence. And a relative divergence is basically taking the average closing prices, except this is the outliner here. This one closed back above it, and it held it here. We kind of held it here. We held it here, and we see that we're starting to hold here. All right, and once we start turning back up and we're holding, that's usually a good sign. And that we're in this downward channel, that's a good sign also. Not that I would have taken that one or even said to take that one. When we look back at it, it's good to recognize that is kind of a relative divergence, especially if you have that type of setup on all three. Also, I don't know if it qualified. No, it didn't here. So we're just, I do this every night. I look back, I go to the markets, and I kind of scroll back through them. Now, I want to show you today, and the lesson plan of the day is, today was a Fed day. And meaning that the FOMC meeting came out. Now, the market started off a little higher. Let me make sure this is the right day. I might have scrolled back a little too much, but I think this is the right day. I'm not 100% sure. Either way, it doesn't matter. We read the markets. You know in the movie The Sixth Sense, that famous line, "I see dead people." That was a good movie. I see divergences. I'm making that T-shirt up. I wouldn't bother with this. This got away. It ran up here, and then it came back down. I'm searching for, the big game. And, again, another analogy. I'm a hunter, and I'm in my tree stand. And I'm sorry for the people who don't like hunting. I'm not really a hunter, but I'm hunting for this setup. And, even though the market is back and forth, and it's very volatile, and it dropped out here right at the open and then bounced right back up. I mean, these things really could hurt traders, especially getting in the wrong side of them. And it's guessing. There's no rhyme or reason from this breakdown here, other than you got to cross over and stuff. I know the rhyme and reason when something works out great. I know what to do. All right, so let's... There's actually a perfect divergence right here. See a little higher low, a higher high here. This is what we call a sell side divergence. That high right here comes right down to this area right here. And then we have that right there. So that would have been actually a good trade, but you have to pull these. You have to pull the trigger on these. You have to pull the trigger on them, and you got to take them. And without getting caught up on it, you could take it off here on the first pullback under the 80 and not have to deal with the whip saw back up here and then the drop. I mean, that gets a little whippy action there. All right. So this is where it starts getting interesting. Now we had the markets. Now this is another thing that I like. And again, this is going to help a lot of people. When we start to identify a trend like this, 1, 2, 3. Oh, what's going on? I just messed something up. I don't know what that is. I'm working with my laptop. It's a little bit more difficult here. So you have this kind of what we call a 1, 2, 3 pattern. 1, 2, 3, 4, 5, 6. When you establish a 1, 2, 3 pattern, you always trade 4, 5, and 6. Now, here you have a downward channel, tested once, twice. Right here you have a low, a lower low, and here you have that higher low and that lower low. So that would be a qualifying divergence. Again, the object is to take the trade and get out of the trade. This is not about saying this is going to be low for the day or anything. Maybe it is, maybe it's not. This is about a methodology and and taking the trades and getting out of them, because most likely this is what's going to happen. You're going to get the chop. Market loves a chop. There's a lot of algorithms out there. You have the low and the lower and the higher low here. The kind of a little pullback here. We have a bullish engulfing pattern here. I'm just going through this real fast because we're going to get to the point where I want to show you something. So we had the Fed come out today, and we had to look at this. Look at this trend line. I put this out during the day. We had this trend line, and look how it came out. 1, 2, 3. There was a channel. We got a little divergence there, a little pop, and then the failure. It came back again, popped back up. Again, something we learned in the coaching session about identifying channels. When a channel is broken, that channel line is still valid. Especially if we come back into it and then go back up to it, it tends to hold almost 90% of the time. You don't say, all right, now this is our new pivot area. This pivot has more points of contact, so it's a stronger line here. So 1, 2, 3, 4, 5. You break through it, comes back down to it. This is really established down here. And then we get that bounce, but where does it come? It comes to the original trend line. There might have been some news. There might have been something here. That kind of, and then we pushed right back. Look at that little candle right up to the 50 trend line, and then right back down to the trend line, and then off to the races. Now there wasn't much here other than trend line trades, and that wasn't. But there was a bullish engulfing pattern, which I like those reversal candles. But it wasn't a signal that I would take. But that's just the name of the game. You're either going to take the signals you're going to take. If you're going to gamble off a trend line, that's fine. I'm not saying that you can't take a trade off a trend line. I do take trades off of trend lines. More time you're in the market, the more time you put yourself at risk. This high and a double top here. High, a lower high. I don't plan this stuff out. And look at a decent drop until we got oversold, and then it popped back up here, and we put in like kind of a triple top. But again, that's our trade right now. Now that's 49. What is that? 45.02, 45.03 down to 44.90. So it's a 3 to 4 point move. Maybe you get 2 points out of it. But the fact is, every divergence here will give you something. Now, it's important to take that off, because how fast, if you get on an entry to here, and it moves down a couple and you don't take it off because you want a little bit more, and then it rips back up, you get scared out of that and you end up taking a loss. You have to have that discipline. So we had a FOMC rate decision today, and you can see the big spike down here. Now, any type of market news, you want to try to understand that's going to be a kind of extended ranges. If you have trend lines or anything like that, you have trend lines. They sometimes get extended, but this trend line was, look at the closing price and how the closing price, each time the closing price basically closed right on that. And then we got back and we held it. 1, 2, 3, 4. Not that one. That one's back above it. 5, 6, 7, 8, 9. 9 candles. And this is just a one-time thing. I could push this. I might be able to. That's probably where the candle should be, right there. I mean, where the trend line would be. And we're putting in this, this these lows are straight across here. Now you can actually see it's a higher low here. Now this was probably one of the better setups after the Fed came out. You have that steep divergence. And that's a tough one to read into. It really is. I mean, because of the choppiness that's there. But you started to see that here and here and here. And even here, there was a little thing. But we had a nice little move up. Again, that little spike candle kind of topped us out. It failed on the stochastics. It came back down. So at this point, we're starting to see the market starting to sell. Fed powers on the air and stuff. And you're feeling like, all right, is the market going to reverse or not? A lot of traders today were waiting. I was watching in the chat room. A lot of traders were waiting for areas to jump in. And down here, the lower stochastic band, this is great when you have a move back up and it pulls back down. But once you see that lower band here, that's your 20 band. All right. Now the market's selling off. You know the market's selling off because it's negative. We had some news and we're underneath the 20-period moving average. This is the criteria. Price is under the 20. The overall sentiment is negative. The trend is down. This is underneath the thing, and we're watching this. We're watching this down here. We're watching how this kind of sets up down here, and we're watching it. But while we're watching this, we're also watching this. Now this is your 9-3. This is your fast stochastic. You see this starts to rotate back up. Now it didn't get up to the 80 line, which we like to see, but it didn't get through that 20 either, and we didn't see any real movement on this. The 60-10 was kind of way underneath, and this is a rule that we call the 2020 bull bear flag. And because it didn't get up right up to our 80 line here, it's probably just because it was a lot more weakness. So not all the time you're going to get up to 80, but if you could recognize how fast this goes up and the strength in this, but there's no strength in here. You know, this is not a good thing. If we go back out, you know, once we break above something and we start to move back up, like back over here, you can see we breaking back above that 20 line and we start to get that nice upward trend. But here, we're getting that rotation here, but we're not getting that rotation here. And again, same thing. Market's selling off. We start to move up. What I call is what we call as a bear flag. After a strong move down, away, and again, for a flag, you need a flagpole. A flagpole is a strong move in whatever direction, you know, the market's trading it. And how do we classify a strong move? A strong move is basically something that's pulling away from the 20-period moving average. If it's pulled away from the 20-period moving average, it gives it room to push back up to the 20 and gives this room to rotate back up. So when we get a pullback and we rotate back up and we almost get to that 80, in some cases we get to 80, but there's no significant move in here, and it's actually, again, the 20 line is our line, but if it's under 10, that's extreme weakness. George Lane says that the overbought, oversold indicators don't always work because if it's extremely oversold, that's a sign of greater weakness to come. And they said the extreme oversold could be anything, and again, our oversold level is basically defaulted at 20, or overbought level is defaulted at 80. That's just industry standard. It's like moving averages, 50, 200, whatever. Once we get down under that 10 mark, that 10, or even 5, if you have a 5 down here and it's down there, that's really aggressive weakness. That's weakness, and there's a good shot it's going to continue to go down. So we had that bear flag. We have a fast rotation, but no action on that, staying under the 20 line. No rotation, staying under the 10 line even there. That tells you that most likely because it's such a fast move up, that's key. It takes a little experience to understand these things. But look at the signal. Do you see a little echocardiogram here happening? A little heart attack maybe? Well, that was telling us to be careful, and if anything, this is a sell signal. So you can actually sell these signals. As you get overbought, holding the 20, and the trend is down, and you see a fast rotation, this is a great level to short. And that's something that we have to really consider, not always buying the market. You have to take advantage of the weakness in the market and identifying that weakness by your 60, 10, and your 9-3. And it's very easy to identify when you're seeing it. Now, the overnight markets are here. This is what I'm looking at right now. There's not much going on. Even here, look at this. This is a rotation up and no movement there. I was just curious. We're going to it's like almost 12 o'clock here. So I'm just curious of what we're doing here. Markets are down 9 1/4 right now. Oh, look at this. This is this is some kind of, sometimes I use this as a technique. Actually, do I have a bot on here? I might have the bot channel on here. Let me see if I can run this. I'll show you that after. So I didn't, I'm not paying attention here at the after hours, but if we were paying attention, I would be outlining certain things for us. So we did have a low, and then we had a lower low here. You can see that red line represents that low right here. And you can see the steepness of the higher low here. Now this is threading the needle. You do have that divergence as it starts to move up right here, right about here. Starts to move up. If you took that entry, you do get a little move. Not much at all, but you do have a little bias to the upside here. You do have that little bias to the upside, and it does again continue to. We talk about getting the divergence and understanding what the current trend is into that divergence. The current trend into the divergence is a downward trend. All right, underneath 20, a divergence is going to break you out of that. So this is kind of a micro pivot area. It's not much, but it's just something here. Once again, it doesn't have to be. You're not going to, and again, your safety factor is getting overbought. Overnight markets like this, you get a divergence. You're not looking for much. And even if it rotates really fast up to here and you get overbought, you take it off. I mean, maybe you get a tick, 2 ticks. That's okay. I'm just looking at the markets right now. This one stands out to me right here. I mean, again, this is something we do in our tutoring session. Is I would just show you a chart like this, and we would go tick by tick, and I'd fast forward this to you, and we'd you would tell me what you see, and as you can see right here, you have a low and a lower low right there. Now, our rule on the stochastics is no matter what we get, whatever we get in, you always put your stop under the stochastic low. That prevents any disasters. All right? So you have a low and a lower low, and that higher low is the thing. Now, we did get a higher low there on the 9-3. And of course, you can see there was not a bad move there. Not a bad move at all. Now, it moved up here into overbought and then pulled back a little. But overall, we did break the bigger channel. We pulled back here, and look at this. This is starting to cross back over the 20 line, starting to ramp up over the 20. Almost a relative divergence, too. Kind of hard to call on this. Kind of hard to call. But you do see that 44, much higher low. Look at the 14. Look at the 14.4. I keep calling it 14.4. It's 14.3. Look how high that is. All right, versus this. So that was something. It's kind of a relative divergence. If we talk about what our relative divergence is one more time, it is kind of an area where the market has those closing prices all averaged out. And again, this candle, we're talking about the closing prices. So this candle's closing price is way up here. So we're looking at the closing prices, which on average what we're looking at. So that's kind of our average line, and we pull back to it. And look at the steepness here. So there was something out there that was showing us that the momentum is shifting. And not to go into what the stochastics are, but again, all in the tutoring. This is where market's getting a little active right now. Whoa, look at this. Look at this. If we were trading together overnight, I would definitely put you right into that trade right there. And that was a nice one. That's what we call a super signal. It pulled back, oversold, oversold, divergence. Oversold, oversold, divergence. Now this is on its way up here. So that's a buy signal right there, and you can see it's already moved up here. So that's kind of interesting too. All right, so one last thing. I've been working. All right, we did the coaching. We did a little lesson plan here. We talked about price changing on the site for members. I do have a coupon out there. It ends this week. So if you're interested in the lifetime membership, which comes like a lot of great benefits and stuff, because there's only a couple coupons left, I'm not going to put it out there. We're going to, if you just want to email me and ask about it, you can do that. The it's for the lifetime membership, which comes with the bots. Now the bots I've been working on, and I'm working on a new one here. It is called the Super Signal. Now, what I teach, I like to automate too, and I don't want to automate just to let it take the trades, which, that sounds all fun and dandy, but I'd like to identify things that the bot can't, like market sentiment, understanding what's going on in the outside world, news and stuff, what the markets could, seasonal effects, what this week means, what happened overnight or today that carries over into tonight, maybe some overnight news and stuff. These are certain things that I rather just identify and stuff. But the bot is I'm working on it, and this looks like a super signal to me, and this was a pretty good relative super signal too. So let's see. I want to run that bot. I have a couple of them I'm working on right now. There's already a whole group of them that you get with your membership. But here's the super signal. We're going to activate that. And I'm just curious. Now, this is not completed. I didn't work on it tonight, but it is in beta. I'm going to probably put it out to the members here next week. I want to do a little bit more work on it. This is just right now identifying the setups and showing you where they are. Let's enable this. I don't know. Let's see what it says. I don't know what it's going to say. Oh, look at that. Super signal right there, right when we called it, right? A safety net right there, trade. So this is basically one of the scripts I'm building out here, is identifying that setup, but it also requires the 60-10 to be set up too, and it also takes it off when we talk about that rotation play, when we get above the 80. Now that's just one. We'll look at over here, and nailed that too. Pretty nice. Let's zoom out here. This one looks like it pulled back. Oh, I know why. So this one identified it too, but I didn't have a trailing stop in, so it just came back down. Or I just had a regular stop in. All right, so that identified a pretty good level there. And then it took the majority off and then came back down. So I actually corrected that. This is one of the original beta tested things here. So I'm just working on some of these right now. Let's try another one. I'm just curious to see. Let's actually zoom out. You see this one right here, where we didn't take it. It got into the trade but didn't take it off. Now I made an additional update on that. So let's take this one off. Let's put the super signal. Is this a super signal 23? Let's take a look at that one. I think this is the one. What is this on? The Bolinex. Let's see. All right. That one didn't grab that. So that was something. And I have one more I'm just testing out here. I don't like these overnight. All right, let's test out this one. Let's just take a look at this. These are not out yet. I'm still working on this, but we are getting very close. This is the one that I have. Yeah, all right. This one's still in the, see, this one's still in the trade. It took 5 off. It took 3 off here, and now it's holding on to it with a trailing stop. You can't see it because it's not active. I just back tested it, and I can just tell what it is. So this will take this other off of another move up above the 20. It will take the rest of the contract, or it will follow up with a trailing stop like this one did here. It took 1 off and then took the rest off here on the second attempt back up above that. All right, sounds good. One thing I don't run too much is the short setup here, and I did notice a lot of short signals today. So I'm running the short bot now, which comes along with the membership. 5 minute, again, we did notice that divergence here, the higher high, the lower high. Look at that short signal. First profit, and then it looks like the second profit, it got followed it up all the way down here for a profit. I'm just going to go real fast through these. Pearson line. Oh, look at that up there. Look at that perfect short up there. 5 minute divergence short. That's actually, I have it on 5 minute strip, but it's perfect on the 1 minute. Look at that. Nice nice target down there. Now I just put this on just to identify it, but we could make sure we could take them there to the trailing stop so it doesn't get run over on the way back up. But we could tighten that up. I just put this on. I don't know what the parameters are set. I just wanted to see if it identified it. But all these levels that you can take it off, really you want to just identify these areas. Here's another one, and then taking profits off of there. So that's definitely some short opportunities in this market. This one could have went down. I don't know what happened to that one. That one didn't hit. I gotta find out that. And then, oh, look at this short over here. Look at those. So divergence short, chopped around pretty much sideways. Nice divergence short, caught the first profit, then second profit with a trailing stop. Yeah, the divergence works good. Oh, look at that top. That caught the divergence right at the highs of the day. These are bear flags. I bet I have a bear flag script also. Actually, I should run just to test it. But anyway, I don't want to waste any more time. I hope you enjoyed this video. Hope you enjoy everything about the video. If you leave me any feedback, I'd appreciate it. If there's anything you would like to see with the coaching or have any questions on that, please let me know. And we'll pick it up from there. Hope you have a great evening. Oh, don't forget the links and stuff will be in the description of the video, and you can also find the information on DayTraderRadio.com. That's DayTraderRadio.com. Have a great night, everyone.